I want to give you the top 3 reasons not to cancel your whole life insurance policy. Now, chances are if you're watching this video, you probably have a whole life policy in place that you bought earlier for really specific reasons, and now you're having some type of life transformation or change, either a change of opinion or a hardship that you're facing, and maybe you're concerned about how you're able to make those premium payments and is it really worth it in the end for you. Well, first of all, I want to remind you why you probably have a whole life insurance policy in the first place. The reason is that you wanted to have a death benefit that would pay out to your family, your beneficiary, your heirs, no matter when you pass away. Now, this isn't a term product where there's an end point on it. This is a whole life product, meaning it lasts your entire life, meaning that there's a guaranteed death benefit that even if you were to live a very long and healthy life, even if you lived all the way to age 121 when this policy endows, then you would live out the whole time frame of your whole life insurance policy and the entire death benefit would pay out to you instead of to your heirs. So either way, you are going to get a death benefit. Now, whole life insurance is also a place to store cash where you have guarantees, safety, and liquidity and growth. Now that provides a lot of certainty in your life because you have this store of capital that you can use and leverage for any reason in your life. Now, as that cash value continues to grow with uninterrupted compound interest, you can take a loan against that policy and put that money to work in another asset. Essentially, you can get 2 returns at the same time with the same money. That's why we call it an and asset. And one of the most important features of this is that the cash value is a guaranteed amount. It's not going to drop in value. And it's going to continue having that uninterrupted compound growth, so you're never going to reset the compounding and go backwards. Now, those are some really powerful reasons to have life insurance in the first place. Because of the guarantees, you're able to maximize every other area of your financial life. Now, if you're considering canceling, possibly you're against hard times and you're saying, I don't really know how I'm going to make those premiums this year, or maybe you've had a life change where you're not sure how you're going to pay premiums in the future either. What I want to let you know is that there are so many other options that don't include canceling a policy. So here's the top 3 reasons. First, if you cancel a whole life insurance policy, you cannot resurrect it or reinstate it. There's no reinstatement rights and you can't change your mind and go back and say, hey, no, I really did want those death benefits. Instead, it's gone forever. You've surrendered your right to the death benefit by giving up the policy. There's no going back. Now, the second reason not to cancel is that if you did change your mind in the future and wanted another whole life insurance policy or any life insurance product, you're going to pay increased rates just for the simple fact that you're older. Now, your older age is closer to the end of your lifetime, and because of the actuarial tables, you are going to be paying into that policy for a shorter period of time, and the cost will increase. So you'd have a more expensive policy, and it's possible that if you face any health concerns, you'd have underwriting challenges that might additionally increase your premium or even make you uninsurable. Now, the third reason not to cancel your whole life insurance policy is that whole life ages like fine wine. Now, it's because of the compound growth inside of the policy. Compound growth, if you remember, the compound growth curve is exponential. In the early years, you have this running start that takes a while to get going, but over time that growth speeds up. So that compound growth inside the policy is going to have the most benefit the longer you have the policy in force. Now, instead of canceling, there's so many other options available to you. And this is kind of like a bonus 4th reason why you shouldn't cancel your policy. Because instead of just giving up and saying, I need to walk away from this policy and surrender it completely altogether, you have so many other options. Whole life insurance has a lot of flexibility built in just for these exact life situations because they realize, hey, life happens. We understand that. And because life happens, we want to have something that is going to be flexible with you. Now, here's a few options for paying your premiums if you can't come up with the dollars out of pocket. First would be reducing to the minimum payment. Now, a properly designed whole life insurance policy is going to have base premium and paid up additions and possibly additional riders, and you can look at paying only the minimum. Now, this is different from paying a flexible premium as with a indexed or universal life policy. This is instead a flexible payment option, meaning here's my full premium, including all of these different types of premium, and I'm going to reduce just to the minimum required, which is usually your base premium plus a small portion of your paid up additions rider. Another option would be to pay from policy values. Now, if you have sufficient dividends, you can surrender the dividend to pay the premium, or you can surrender cash value to pay the premium. So those are 2 additional options that would further extend the life of your policy or get you through a rough patch so you could pick up paying the premiums later in the future. You also could take a policy loan. Now remember, that guaranteed loan provision that allows you to access that cash value says that you can use that for whatever you choose, even if it's paying premiums on that exact same policy. So you can use a policy loan, which is going to put a lien against the current cash value to pay your premiums. Yes, that's going to continue to increase and accrue interest. You can choose to pay it off when your cash flow situation changes or not, as long as it doesn't grow so large that it overtakes the policy, which would then collapse the policy. You can also reduce pay up. Now, what this means is that you're using the cash value to purchase the amount of death benefit that is completely paid up with no further premium required. Reduced paying up a policy would mean that you will no longer have premiums due out of pocket, the death benefit would decrease, and your cash value would stay the same. Now your cash value then and your dividend growth would slow down for a short time and then would pick up again as time goes on. This is an option that would reduce your death benefit but allow you to keep the same policy in force. You also could do a 1035 exchange for a new policy, or there's sometimes an option to use a life settlement and sell the policy. Now you have so many options besides canceling. Now what I really want you to think about is that whole life insurance is a long-term wealth creation tool, and it is designed to help you even through short-term challenges. So don't let a short-term challenge wipe out your long-term vision of what you want to create in your financial life. That's why you should not cancel a whole life insurance policy. Hey, I hope you liked this video. If you did, click the link in the description box below for more information. And don't forget to like this video. Share your comments, questions, and feedback in the comments section below. And don't forget to hit subscribe to our YouTube channel.